What if I told you the hardest money you will ever make in your entire life is your first $100,000? Not your first million, not financial freedom, not early retirement, just that first 6 figures. Because once you cross that line, something shifts. The rules start to change. And most people quit right before that shift happens. Here's the problem. Almost everyone believes wealth grows in a straight line. You save $10,000. You assume you're 1% of the way to $1 million. You save $100,000. You think you're 10% there. It sounds logical. It feels logical. It's completely wrong. Money doesn't grow like a staircase. It grows like a snowball rolling downhill. At first, it barely moves. It feels heavy. You're pushing with everything you've got, and nothing exciting seems to happen. And then, eventually, if you don't stop pushing, gravity takes over. We live in a world addicted to speed. Groceries in 20 minutes, movies in seconds, same-day shipping. But compounding doesn't care about your impatience. It works on a completely different timeline. And that disconnect is exactly why so many people give up before things get interesting. Let's make this real. Imagine you invest $500 per month. Not pocket change, but not impossible either. For many people, that's the combination of a few subscriptions, some dining out, a couple impulse purchases, and small upgrades that don't really change your life. Instead of spending it, you invest it. Let's assume a 7% annual return, which historically is actually conservative for long-term stock market averages. At that rate, it takes roughly 8 years to reach your first $100,000. 8 years. That sounds long. And during those early years, it feels slow because it is slow. Most of that first $100,000 comes directly from your own contributions. You are doing the heavy lifting. Your discipline is carrying the process. Compound interest is barely contributing in a noticeable way. If compound interest were your workout partner, it would still be stretching in the corner while you're doing all the reps. But here's what most people don't realize. The moment you hit that $100,000 mark, you've completed the hardest phase. Not because the math changes dramatically overnight, but because momentum starts building. The next jump to $200,000 doesn't take another 8 years. It takes closer to 5. And that's when people start to notice something different. Your money begins producing amounts that feel real. Now fast forward. Stay consistent. Keep investing the same $500 per month. Let time and returns stack. Somewhere around the 20 to 22-year mark, you approach $600,000. And around $650,000, something powerful happens from a lifestyle perspective. At an 8% return, $650,000 can generate over $50,000 per year in investment returns. That's not theoretical. That's math. And suddenly you realize something uncomfortable and liberating at the same time. Your investments are producing income comparable to what many people earn by working full-time. Think about that. Assets generating income. No commute. No performance review. No asking permission for vacation days. Your portfolio doesn't care about office politics. It doesn't need coffee breaks. It just compounds. This is the milestone where financial fear begins to shrink. Losing a job becomes stressful, but not catastrophic. Want to start a business? It becomes possible. Want to switch careers? You have breathing room. This is where money stops being survival and starts becoming leverage. But we're not done, because the psychological shift at $1 million is different again. If you consistently invest $500 per month at 7%, you're looking at roughly 29 years to reach $1 million. That might sound like forever. But here's the reality. 29 years will pass whether you invest or not. The only difference is what you'll have at the end of it. At $1 million, assuming responsible withdrawal strategies, your investments can reasonably generate $40,000 to $70,000 per year depending on return rates and how aggressively you withdraw. That doesn't mean you quit working immediately. It means you have options. And options change everything. The real transformation at $1 million isn't the number itself. It's the psychological unlock. You stop seeing money as something you chase. You start seeing it as something that works for you. And here's where the math becomes even more fascinating. Going from 1 million to 2 million does not require starting over. It requires growth. Historically, markets have doubled over long enough time frames, roughly every 7 to 10 years. That means the second million is mathematically easier than the first. And the first 100,000 was harder than the jump from 1 to 2 million. That's the part most people never experience. They stop at 20,000, or 30, or 50, because progress feels invisible. But compounding is exponential, not linear. Each dollar earns returns. Then those returns earn returns. And over decades, that stacking effect becomes dominant. Now let's address the obvious concern. What about market crashes? What about recessions? What if everything drops right when you need it? These are real risks, but here's what long-term investors understand. If you're consistently investing every month, downturns are not your enemy. They're discounts. When prices fall, your fixed monthly contribution buys more shares. And historically, markets have recovered over long periods. Not smoothly, not predictably in the short term, but consistently over decades. The key is not timing the market. It's staying in the market long enough for compounding to overpower volatility. That requires patience, and patience is rare. So let's recap clearly. Around $100,000, compounding starts pulling its weight. Around $650,000, asset-generated income becomes meaningful and life-changing. Around $1 million, financial fear shrinks dramatically and flexibility expands. After that, growth accelerates because percentages compound on larger bases. This is not about luxury. It's not about yachts or showing off. It's about choice. The ability to say no to work you hate. The ability to take risks aligned with your values. The ability to design your life based on intention instead of necessity. Time will pass anyway. The only question is whether your money will be working during that time. If this perspective helped you see wealth differently, subscribe for more breakdowns like this, where we focus on long-term financial mechanics instead of hype. And in the comments, tell me honestly, which milestone are you closest to right now? Are you building toward your first 100,000? Approaching that 650,000 acceleration zone? Or already past 1 million and aiming higher? Let me know.